As we try to wind down now, let's quickly take a look at how the Nigerian capital market has fared from 1960 to date. But before we go deep into the conversation, let's tell you that from the early beginnings, when only 19 securities were listed for trading to the now demutualized market, and over 300 securities composed the stocks, bonds, and exchange-traded funds worth about 49.6 trillion naira to overall capital market capitalization combined. The Nigerian Exchange Group PLC, founded in 1960 as the Lagos Stock Exchange, has transformed to Africa's gateway market, connecting Nigeria, Africa to the world. Before we get into the course of the conversation, let's tell you how the Nigerian equities market has performed in the past week.
Well, it was a somber week for investors as the Nigerian equities market continued its sustained bearish trading, causing investors to lose billions of naira, making it a week long of declines. The bearish trend also led to subdued market activity, with total deals decreasing by 2.74% to 6,826 trades. Trading volume and value depreciated by 24.78% and 24.67% respectively, with 273.8 million units exchanged for 3.4 billion naira. The persistent bearish sentiment highlights the need for investors to closely monitor the evolving market dynamics and economic policies as uncertainty continues to cloud the Nigerian financial landscape. Now, to discuss more on this as we assess the state of Nigeria's capital market in the past 63 years, we now have with us in our Lagos studio Chief Research Officer, Invest Data Consultant Limited, Ambrose Ombodio. As always good to have you on the show.
Thanks for having me again.
And happy independence to you.
Same day, brother.
Let's start off our conversation with your assessment of the Nigerian equities market from 1960 to date. What do you have to say about the growth of the Nigerian capital market from September 1960 when it came on board to this moment? And what will you say has led to the growth in terms of trading activities, volume of transactions, and numbers of listed companies on the exchange?
Anywhere in the world, you can't separate the economy from capital market. As the economy is expanding, capital markets want to move that direction, knowing that that is where most government or the economy have to set for fund for long-term fund. For me, Nigeria market has evolved from when we have just few stock listed, now have almost more than $1 trillion in terms of naira on the exchange. The good news is that markets also have followed what we call the four phases of the market: the accumulation phase, the markup, the distribution, and the decline. We saw when the market was up 2007, because if you look at our democracy day or democracy time back for 1999, the market was still struggling. But because it was a new government, confidence was not much. But as we go into that first democracy, people started having confidence, because when you see democracy coming back in the economy, it kind of boosts confidence. We saw that the economy was growing, and it was also reflecting on the market. For straight 5 years of that first democracy that we had market being in green for each year. We tell you that at that point we were seeing people coming back. We are seeing MTN, Airtel, all of them come back to Nigeria to invest, to come and establish a company, which also has helped us to grow our economy today. That means we can't separate the economy from capital market. For me, this is a good thing that if this present government is looking the world capital market also to drive the economy, I say yes, they know what they are doing. But only the business model which we need to tweet now. Because the business model then and today has changed. And also, if Nigeria want to move to the next level, it is time for our economic managers and the government to look inward, not copying another model from another client. If you are copying the model from US, from Europe, you're going to fail.
If you don't domesticate it.
Even today, thank God we have a new CBN governor. If you want to twin Nigeria economy to the pattern of what we are seeing in US today, in Europe today, we are going to fail. Why? Because those guys, they decide that in hiking interest rate, they are going to control the economy. But our own here is not the hiking we need. We need what structural change. That means if you want to please them by trying to put your interest rate to a point that if you are attracting foreign investors, you are killing your own economy. That means it's time for us, the new CBN governor, to come and say, yes, I want to grow the will of the president. Because the president has given us a body language that for us to run this economy to grow to 6% GDP, we need to have what? A declining interest rate. And also, I said in this program that we got to change the issue of post-COVID-19 era. The only country in the world that have hit another 6% GDP is what? is Japan. And Japan has been operating well since then. Even when others were increasing their interest rate, Japan was seeing a negative interest rate, still buying the government bond as we speak now. And the economy is still intact. For me, I believe that our economic managers and the government should sit down, not patterning our, our economy to either to US or Europe or China. Let's look what is happening within Africa and within ourselves, Nigeria. What can of that help us? Because if our economy is doing well, we attract foreign investors to economy. It's not taking your interest rate high to attract cheap fund coming. Do economy whether you're going to be aggressive, we are growing, you're not coming back to us. Because I tell you, the matured economy are looking at where is opportunity, and that's opportunity in Nigeria. Also, it is not done on our government to take opportunity that will address things that will attract them. One is let's have security first. Once we solve the security problem, not totally, but when they see that we are making impact on security, they are seeing that we are making progress, it's a good company. And at the same time, let's know that the major thing is the movement of goods and services anywhere in the world. And we know that the cost, we know that now that we are seeing the cost of fuel, diesel is up. Yesterday I saw that government has removed VAT for what? For diesel to encourage production in Nigeria, which is good, but we need to do more. Once able to do that, I tell you, our partners should far different from what we are seeing in Europe.
Let's look at some of the lessons that this administration can pick from the involvement of the stock market since 1960 and how it can improve Nigeria's exchange flow.
Like I said earlier, that the first democracy after the new, let me say that when Nigeria evolved back to like 1999, we saw how the government then took advantage of the capital market, which also impacted the Nigerian economy. And from the first day of this president's speech, we have seen that the man is disposed to using the capital market again to drive the economy. You must make policies that will attract people to play the market locally. Anywhere in the world, when you depend on foreign investors to run your economy, apart from having direct investment in developing area, come and give us a factory and all those ones. If you want to make policies that want to give your market to them, your market become what? Very flexible. And that means it cannot be sustained again. You can see that market become, the volatility will increase. And that will affect your local investor, because foreign investors, there are two. The portfolio investors are there to make money. They're not ready to wait for anything. Why the direct investment that want to invest in oil sector? So today we're enjoying patent of telecoms in Nigeria because they came with direct investment. Today they are creating employment for Nigeria. But if you are looking at portfolio investor that want to carry his portfolio, as his name appears, to Nigeria with dollars, the day make profit, the day selling, you throw every market into the red. Don't forget that before the crash in 2008, we have less foreign investor playing the market. But when the market crashed, it opened up the market crash to take over the market. They're having about 68% of the market after the crash. Anytime they are going, our market will be going up and down. So the market, this year market, like 2014, 2016, 2014, 15, the market was in red for 3 years because of foreign investors exiting the market too. You see, we don't want something to repeat this. So that we must plan that a market that foreign investors has like 28 or 25% is very healthy for us. But when they have more than 28 or 30, because they're challenging, because when they are going, but now today, our market has for good 4 years, from 2020, when the market hit 11 years low, because of COVID-19 news entering Nigeria in February, the market in March hit almost 11 years ago. Since then, the market has recovered for straight 4 years by local investors playing the market. That is a good news for us. That means we need to encourage more local players in the market. That means government should make policy, and also because of the economy is also very tight. Because when we are not saving, we cannot invest. There are now people that cost of living is high. Now it is not government that policy that will attract people to start doing business, let the economy feed the oil of people earning, spending. We see that around the economy, then capital market will because we now see more people coming to invest. I tell you, when you are not thinking of your body, you cannot think of investment. That means it is when you are earning well that you can invest. And investment also improve your spending. Because if you have saved and invest, you're making more money from investment, you cannot spend, you cannot buy what everybody is producing, that will oil the economy. But if you are not investing, you are not saving, how are you going to spend? That means we need government to make sure that less policies are coming at the end of the day.
Okay, now. So let's get your view on this as we wrap up now. How would you say the demutualization of the NGS that happened sometime last year has contributed to the transformation of the Nigerian capital market?
For me, it's a work on development, because if you look at most, big market in Africa and advanced market, see that their market is also demutualized, so that to give access to others to play. But when you are playing in the same market with other components, you need to also stand out, because you are part of the regulator of the market. But here in Nigeria, just because, this year now, we saw about 25 people, dividend paid to shareholder. I'll tell you that if you check the cost of running NGS before and now, it has changed. we are seeing high payment for their staff and all those stuff, which also that at the end of the day, it is what that management are benefiting more than the shareholders.
We have to go. Apologies. I know there's still so much to talk about. In 1 minute, if NLC goes on the strike, the impending, so much talked about strike, how do you see it affecting trading?
Definitely, it will affect trading, because I tell you, the activities that we're trading and the news that we're trading, if a company is closed down for 3 or 4 days, it's going to affect the performance at the end of the day. Now we're also, yes, the quarter has ended, we're entering another new quarter. Fine, we're expecting a result for the last quarter, but if for 4 days in the new quarter, it's going to reflect on their numbers at the end of the quarter that we're entering now. Right. But for me, the good thing is that we have seen that the week September or mid-September has come to an end. We have now entered the all-important last quarter of the year. Investors should think that this is the quarter they should play the market, because anywhere in the world, this is the most active quarter. Why is the most active quarter? I will tell you, most of them are sleeping activities for end of the year festivity. A lot of that come end of the year. See, both companies will want to meet. That means the companies that will make money in this last quarter are many, and not only Nigeria, across the globe. That means investors should now invest wisely on companies that have that potential to sustain their earnings they made in Q1, Q2, and Q3, that can now invest wisely for the Q4. Thank you.
Thank you so much for making that as precise as possible. Ambrose Obodio is Chief Research Officer, Invest Data Consulting Limited. We appreciate you for your time. Well, we have to wrap up this show right now because we're really pressed for time, but we must say a big thank you to you for joining us on this Independence Day special program coming to you from iBrand TV. My name is Omobolandi Adishu.
And I'm Blessed Amadose. From all of us here in iBrand TV Lagos studio, we say happy 63rd Independence Day, Nigeria. Thank you for being a part of the conversation.